something's got to give. What is very interesting, though, about silver is just look at these spikes. A 3-year-old can tell you what happens next, and that is silver spikes, like it did in 1980, and then it mean reverts big time back to where it came from. 2011, spikes, and it mean reverted back to where it was in 2008. And here we are, third spike in nearly 50 years, more than 50 years. What happens next? Everything mean reverts. That's just my view of the world anyway.
Hey friends, welcome back. Thanks so much for being here. Guys, in this important silver update, I'll show you that I'm putting my money where my mouth is. And I'll tell you exactly why this Harvard Business School educated pundit may be very wrong about silver mean reverting. The mean reversion in this case should be to $215 an ounce. Friends, thanks so much for being here. Before we start, just a quick word about a valued sponsor. Patriots who have Gmail, listen up. Weeks ago, the biggest email hack ever just leaked 183 million passwords. Yours most likely is out there right now, handed to hackers who steal social security numbers, bank details, even your name to drain accounts and rack up debt in your name. We're talking about identity theft, crooks pretending to be you, wrecking your credit, your savings, and your life. But here's the fix. Virtual Shield Identity Protection. You can easily sign up and it scans the dark web daily for your leaked info, blasts alerts to your phone if something's fishy, and if thieves strike, up to $5 million insurance can help you cover lost wages, legal fees, even stolen money. Plus, 24/7, 365, U.S. experts will handle the calls and cleanup. You just relax. And no foreign nation state has any pull over Virtual Shield. This Black Friday, take advantage for only $4.88 a month. Grab it at virtualshield.com/SGT. That's virtualshield.com/SGT. No more waiting. Your family's future depends on it. Eyes wide, defenses up. The link is below. Friends, thanks so much for being here. Sean from SGT Report. Now, it's Sunday afternoon, and let me tell you, I think the silver price tonight could spike by another $3, $4, $5 or more, or the banksters could smash it with paper by $5. It could go either way, but it does not matter to me because I spent the weekend combing coin shops with my wife, hoarding another 130, 135 ounces or so of the shiniest white metal. This is what I picked up at the local silver shop. It's actually sort of an old antiques shop, but he carries a lot of precious metals too. So we got a bunch of silver eagles, kangaroos, got a couple of 1 1/4 ounce wildlife series coins, got a sovereign, got some generic buffaloes, some silver eagles, and we wonder what the price will do on Sunday night. I think it's going far higher over time. Remember, it takes $215 in today's dollars to equal the 1980 all-time high for silver of $50. $215 in 2025 dollars. We're nowhere close to that yet. I was grabbing just about anything I could from just the 2 locations in my area that carry real money, silver, and some gold. Now, folks, the reason I think that our friend over at Invest Answers may be very wrong about silver suddenly mean reverting back down to the 20s or 30s is because of what happened on the COMEX over the weekend, the CME specifically, with their power down issues, causing the entire CME to go offline for a brief period of time as we saw that $3 spike in silver. Now, David Jensen, our friend, says, why silver has smashed to new all-time highs today, this was written on November 28th, silver is trading above $55 USD an ounce today, and the question for many is why? In summary, worldwide shortage. Silver shortage has raised its head and is towering over the world's largest cash spot physical silver market in London, where billions of ounces of silver that cannot be delivered has been sold to unwitting cash market buyers, and that has now become visible. Jensen notes, over the last 38 years, the scale of London's silver market leverage is nothing new. However, what is new is that on October 10th, 2025, for 1.5 hours, the London silver market stopped trading during trading hours as silver offered into the cash market dried up, showing the world exactly where the effective bottom of London's silver vaults is located. On that day, the world saw that when London vaulted silver holdings for exchange-traded funds, ETFs, is withdrawn from total vault holdings, the remainder, 140 million ounces, is merely vaulted in London and is unavailable to market. And that is a problem for London's silver market that trades more than 700 million ounces of paper silver, I would note, per day in the cash spot immediate ownership and delivery market, where billions of ounces of such cash silver contracts remain open. Commentary from bullion banks after October 10th indicated that much silver would flow into London from New York, Shanghai, and Switzerland and fill London's vaults. Indeed, 54 million ounces of silver was shipped to London thereafter, we're told. However, in a world that has seen 7 years running of silver supply deficits, continuation of that flow is wishful thinking at best. When London hit rock bottom on October 10th, holders of these cash spot contracts were alerted to the leveraged scam by the London silver market itself, inducing more contract holders to demand delivery of silver while they still can. Are overseas markets going to help London out of this pickle? Nope. Jensen notes in early 2025, some 235 million ounces of silver flowed into the New York vaults, and 140 million ounces of that surge remains. However, demand for silver in New York is increasing and is reflected in pricing structure, which has not seen development of a sufficient discount to London prices to support movement of precious metal back to London. The total 150 million ounces of silver in New York vaults that is available to market appears to be going nowhere at present, despite growing distress in London. Meanwhile, China's demand for silver is accelerating, and Shanghai market silver vault stocks have collapsed to 39 million ounces, reflecting a round trip to levels last seen in 2015 when the current Shanghai silver market was just getting started. Friends, London's billion-ounce silver problem remains. The billion of ounces of silver cash spot contracts for silver in London represents a problem that would take years of much higher silver prices and silver refineries worldwide running at maximum capacity to resolve. London's silver problem is immediate. Each week that passes, now we'll see a compounding of London's silver problem as the world further awakens to the London precious metals fraud created with oversight of the Bank of England that has been used for decades to fix the price of silver, gold, platinum, and palladium in the world's largest cash precious metals market. While bullion banks and central bankers for decades were able to convert these metals into virtual assets that could be created without limit, yes, paper silver and paper gold, central bankers were freed to blow credit and asset bubbles globally with loose monetary policy as gold and silver and their important inflation warning signals were switched off in London. Those days are now over. The consequences are about to become very real in every sense. Best regards, David Jensen. Now, this from Gold Silver HQ over on Twitter. It may be a bit of hopium, but it's certainly within the realm of plausibility when you consider just to get back to the 1980 all-time high of $50 in silver in today's dollars, we need to get to $215 per ounce of silver. Gold Silver HQ notes the decades-long cup and handle pattern suggests a $700 silver price target. But William Middlecoop, somebody I hold in high esteem, notes, then there are the large traders that hold hundreds, if not thousands, of contracts. The big 8 commercial traders are net short 64,483 COMEX silver contracts as of the last COT report we have data for, October 14th, about 8,000 contracts each. The shorts in gold and silver collectively have $60+ billion in unbooked margin call losses and are all screaming in pain. How soon will they be forced to cover regardless of the cost? That's what we're witness to at the moment. As we round out the conversation, guys, again, I put my money where my mouth is, but as hindsight goes, hindsight is 2020. And I got to tell you, when silver was 104 ounces of silver to 1 ounce of gold back in April, I obviously wish I had bought a lot more. By the way, silver is money. Don't let anybody tell you different. And when you exchange your fiat paper $100 bills for physical silver in the hand, you'll know the difference and you'll get addicted. $15 in constitutional money is now worth $505 in unconstitutional money. Yep, silver and gold still act as money for those who hold the precious metals, while they print your fiat into oblivion. And by the way, silver is now absolutely crushing and outperforming Bitcoin as well. We'll play the entire clip from Invest Answers regarding silver right now. And again, we'll see if he's right about mean reversion, to not mention the decades-long manipulation scheme of physical silver and physical gold via the paper markets at the LBMA and the COMEX. To not mention those things when looking at the silver chart is, in my view, a bit of ignorance on display.
But this is silver screeching away. I remember I used to trade this between $22.50 and $27.50 for the longest time. And now it's at $55. And this is now above the 1980 spike. It's above the 2011 spike. And it's, I think, $55 an ounce for the first time in history today. And while everybody's fighting over the AI bubble, precious metals are beginning to crush every other asset class. But what does this mean exactly? Well, gold and silver, they are considered canaries in the mine. They sense trouble out there, trouble with fiat, etc. And people are stacking hard assets like there's no tomorrow. Now, what's interesting is gold first. Typically, silver follows gold. But also, Bitcoin's supposed to follow gold, but it didn't. But now we see silver following gold. Maybe Bitcoin is next. We shall see. But when you look at this chart, this is Bitcoin compared against silver. And we are in a monster bear market. Look how much that thing has just dropped off the face of a cliff from about 3.4 ounces, or is it 3,400 ounces? Yeah, 3,400 ounces per Bitcoin, all the way down to, let me get this number, blow it up. I think it's 1,600. So we've gone from 3,400 ounces of silver per Bitcoin down to 1,600. That means we need about 110% gainers to get back to the all-time high. Not only is Bitcoin severely lagging gold, but now also silver. And Bitcoin's a commodity. Bitcoin's considered gold 2.0. And all the grave dancers are out laughing at this. So something's got to give. What is very interesting, though, about silver is just look at these spikes. A 3-year-old can tell you what happens next. And that is silver spikes, like it did in 1980. And then it mean reverts big time back to where it came from. 2011 spikes. And it mean reverted back to where it was in 2008. And here we are, third spike in nearly 50 years, more than 50 years. What happens next? Everything mean reverts. That's just my view of the world anyway.
Keep stacking, friends. And thanks so much for tuning in. I'll remind you every single day for free. Check us out to get the real news, the antidote to corporate propaganda 24/7 at sgtreport.com. Until next time, God bless.
Entering a time of unprecedented deception. So we have to have discernment. The late Chuck Missler said, "We're being plunged into a time about which the Bible says more than any other time period in history." There's no panic in heaven just because Mossad, Deep State, and the Rothschild banking elite are in control.